Hello, thank you for tuning in today. This video is part 2 of the collapse of China's real estate bubble. In the previous video, we explained how China's real estate market began growing in the 1990s and gained even more momentum in the 2000s. In this episode, we'll take a closer look at how the real estate bubble, which expanded even further after the 2008 Lehman shock, eventually burst, exploring the background and process that led to its collapse. If you find this video helpful, please don't forget to subscribe, like, and hit the notification bell so you don't miss out on future updates. The Lehman shock and China's economic response. Let's start with the large-scale economic measures China implemented following the Lehman shock. In 2008, the global financial crisis threw the world economy into turmoil. China wasn't immune to this impact, experiencing a decline in exports and slowing economic growth. In response, the Chinese government announced an enormous economic stimulus package, totaling 40 trillion yuan, about 600 trillion yen. This plan focused on infrastructure investment, including the construction of high-speed railways, akin to Japan's bullet trains, which began during this period. Through this project, a high-speed rail network spread across China, reaching remote areas such as the Xinjiang Uyghur Autonomous Region and Yunnan Province. Moreover, projects like the construction of interprovincial highways and Beijing's new airport were executed. This rapid infrastructure development sparked the beginning of the real estate bubble. The real estate boom spreads to local cities. Following the Lehman shock, these economic measures helped fuel the spread of the real estate bubble across China. Real estate development, which had previously centered on coastal megacities like Shanghai and Beijing, expanded into inland local cities. Local governments seized this opportunity to launch massive urban development projects, further heating up the real estate market. Let's explore a few symbolic examples. First, there's Hohhot, the capital of Inner Mongolia. Rich in coal resources, this area saw large-scale real estate development. Due to the surge in resource prices after the Lehman shock, many high-rise apartments were built in the suburbs. But with fewer residents than anticipated, the area has become a ghost town. A similar phenomenon occurred in southern China, in Guiyang, the capital of Guizhou province. Guizhou is one of China's poorest provinces, with mountainous terrain. However, the post-Lehman real estate bubble reached even here, leading to the construction of numerous high-rise apartments around Guiyang. Unfortunately, the demand in this region didn't match the supply, resulting in many empty apartments, turning the area into a ghost city. Manhattan Project. Another noteworthy case is the China's Manhattan Project in Tianjin. Backed by the Chinese government, this project aimed to create a massive financial center on reclaimed land in the suburbs of Tianjin. The idea was to turn Tianjin, the hometown of former Premier Wen Jiabao, into a new financial hub near Beijing. However, the development didn't proceed smoothly, and some construction was halted, leaving several skyscrapers unfinished and abandoned. Despite being a government-led project, it stands as a notable failure due to overly optimistic demand projections. Collapse of China's real estate bubble. Eventually, the real estate bubble that had spread from local cities to major urban centers reached its limit. One of the triggers was the COVID-19 pandemic, which began in 2020. The pandemic led to a contraction of China's overall economy, and many real estate projects came to a halt. Additionally, the Common Prosperity policy promoted by President Xi Jinping further accelerated the bubble's collapse. As part of this policy, the government imposed strict financial regulations, known as the Three Red Lines, on real estate companies that had been overly reliant on borrowing. These regulations made it difficult for real estate firms to raise funds, stalling the development of new projects and the completion of existing ones. Moreover, the pandemic-induced lockdowns caused Chinese citizens to prioritize saving over real estate investment, further weakening demand for property. This shift in behavior also contributed to the decline in real estate demand. The spread of ghost towns. As a result, many real estate developments across China were based on overly optimistic demand forecasts, leading to an oversupply. This oversupply has resulted in unfinished high-rise apartment and office buildings being abandoned, creating ghost towns throughout the country. This phenomenon is especially noticeable in local cities, where numerous vacant and unfinished buildings can be seen. The Chinese government's response and its effectiveness. In an attempt to prevent the collapse of the real estate bubble, the Chinese government has implemented various measures, but their effectiveness has been limited. For instance, financial support has been provided to local governments and real estate developers, but these efforts have yet to address the structural problems of oversupply and falling demand. Additionally, the issue of ghost cities scattered across China remains a serious challenge, with efforts to revitalize these areas still underway. So, what did you think? In this video, we've covered how China's real estate bubble, which expanded even further after the Lehman shock, eventually burst. The problems caused by excessive real estate development not only impact China but could also have significant repercussions on the global economy. Thank you for watching until the end. If you found this video helpful, please don't forget to subscribe, like, and hit the notification bell so you won't miss future content. See you in the next video.